This is one of the unusual, I would say, results, maybe to some degree counterintuitive. People might not sort of realize, but it looks like this is the trend that we expect. You'll notice that in 2025, in the left-hand side, these are prices at 3 points. Henry Hub,
Wow.
that's the blue, that's in the United States, near
Right.
the LNG export area. And then you have two others that are kind of close together. TTF is into Europe and into the Netherlands, and Japan, Korea price, this is into Northeast Asia. And you can see that what it looks like to us is that over the next several years, after a couple of years, there's going to be so much LNG on the market, largely from new LNG projects that come into service in the United States and
Right.
expansions of existing ones, that there's going to be significant downward pressure on prices into Europe and into Asia over the next several years until the early 2030s. And, at the same time, Henry Hub kind of strengthens a little bit. So the spread, between Henry Hub and the Europe or Japan goes down to the point where the spread itself is, you can see it just gets smaller and smaller until it's actually lower than $2, which, essentially means that, the transportation cost, of getting there
Right.
might be higher than the spread between them. But look what happens after that. The market does actually, because of the increased growth in South Asia, Southeast Asia, China, and kind of a flattening out of production capacity after this, you can see
Right.
prices do strengthen up after that in the long term. So I think that's a pretty interesting